Broadcom shares popping here in overtime. AI revenue up 77% year over year. The stock's up 9.5% so far after being down just over 6% in the regular session. Joining us now is Bernstein senior analyst Stacey Rasgon. He's got an outperform rating, $250 price target on the stock. Stacey, this pop, if it holds tomorrow, would take us back to where we were a week ago when things were perhaps a little kinder out there for semiconductor stocks. How different is this from Marvell, which I know you don't cover?
Yeah, no, you bet. So I think the setup here is a little different. Both companies had good results. Even Marvell, relative to consensus, was decent. But I just think buy-side expectations were much higher for Marvell, especially into the first half. People were looking for their AI revenue to ramp more. It's different drivers, though. Marvell, it's on the custom chip side is more Amazon. Broadcom is more Google, and whereas I think with Marvell it was more expected in the first half, for Broadcom it's expected in the second half. So I think expectations were lower. Now on top of that, Marvell was just sort of in line-ish. Like Broadcom had a pretty decent beat and raise. Gross margins were really good. And importantly, the AI revenues, both in the quarter as well as on the guide, are quite a bit above the street. So I guess you could argue that the non-AI semis are weaker, but maybe that's not a shock. And people certainly care much more about the AI. They did what they do. They did 4.2 or something in the quarter. The street was at 3.7 or 3.8. The guide is for 4.4, again, quite a bit above the street for AI semis. And so the parts of the story that people care about, I think, are really coming through here. And again, given where I think, especially after the pummeling that the stocks had over the last several weeks, expectations were lower going into this. And so you got a bit of a relief rally going on right now. And I should say, even at the 180 that the stock was at, it was almost dead in line with where it was 3 months ago, right before their last earnings. So we got it, we gave it back. Maybe we'll get some of it back again.
So, I mean, you talk about AI and non-AI, but I guess the worry for investors might be that even the AI semis have healthy valuations already in an environment where people are worried about tariffs, people are worried about export controls, and just sentiment might be taking a beating. What do you have to say about that?
Yeah, and look, so the AI names in general have been weak, as we all know. And some of it, I think, is concerns over sustainability and all this other stuff. All I'd say, investors are worried about peak AI. Like the companies and the customers don't really seem to be worried about it right now. But you've had those issues. I'd say also, just in terms of the general volatility that is out there with some of the policy changes and everything, I think you've just got like a broader de-risking going on. And some of these AI names were, the valuations were richer. And so I guess I'm not surprised in that context to see some of that de-risking. And my guess is not all of the sell-off that we've seen in these names is necessarily entirely related to just the fact that they're AI names.
The policy piece of this to me is really fascinating. And I keep having conversations with C-suite folks and policy folks, former policy folks, and it's like everybody keeps using this word uncertainty. And I get that. But when you look at something like CHIPS Act, for example, which President Trump made comments about in the joint session the other night, and I found myself having conversations with folks who seem to think that you might see some layoffs of some of the folks that are involved in that program under the previous administration. Do you buy into any of these names right now? Are some of these companies that are making investments into things like foundries here in the U.S., like, do you go anywhere near that right now? Or do you sit on your hands and you wait and you see what happens here and more policy certainty to actually materialize?
Remember, there's not a lot of companies that are making massive fab investments. In fact, if you look at the CHIPS Act awards, I think more than 80% are to 4 companies. It's Samsung is the biggest. Samsung, TSMC, Intel, and Micron are 80% of the awards that have actually been officially given. So it's not that many names within the space that are doing this. And certainly you have fabulous names like a Broadcom or like an NVIDIA that are not investing in fabs. They don't build fabs. In fact, they would benefit to the extent that extra capacity gets built. So no, I don't think that. I think the CHIPS Act issues are another. Maybe they're a little more orthogonal to this, another issue entirely. I don't know that you can just cancel the CHIPS Act, by the way. Like, I know Trump seems to hate it. It requires an act of Congress. It's a fairly popular act of Congress, so we'll see if they would go along or not. To your point on layoffs, though, I guess that's one way to slow walk it. If you fire everybody that can, sign a check, maybe you slow down some of the efforts of the CHIPS Act, maybe.